They just rug pulled everybody in this economy. Billions and billions of dollars gone just like that in what they call equity. It blows my mind. People should be furious. Good morning, everybody. I hope you're having a wonderful day. And if you're watching this video, you're probably really into real estate like me. You're probably an investor or a future homeowner, and you're really wondering, like, what is going on with the market right now, 2022. It is a wild market out there, and I gotta talk about my opinions about the market as a real estate agent, somebody that's in deals every day. I want to tell you my thoughts because real estate agents are just not out there saying this stuff. And I'm going to tell you what I truly think about the market as a real estate agent, unfiltered. Here it comes right down the tube because that's just my personality. So in this video, I'm going to talk about the absolute apocalyptic things that could happen in the real estate market in the next year and a half. I'm going to give you some hard times. I'm going to give you some factual numbers. I'm going to walk you through this the best I possibly can because most likely if you're getting a real estate agent, they want to sell something and they will not tell you what they think is going to happen in the next 10 to 15 months. And they all know it. They all know it. They just won't say it because, of course, they are in the business of selling. And on the other side of that, if you are trying to put a house on the market, you need to know these things. So here we go, unfiltered. Let's do this. So as you know, if you've been following along, you know I have talked about, hey, we are in record high inflation, the worst in 40 years. We have an S&P 500 that is down 20 some odd percent, fluctuating volatile every day. Up 1 point, down 2 points, up 3%, down 2%, up, down 1%. It's all over the place. We also know that we got a 0.75 rate rise last month, well, this month, and we'll get another one next month, and most likely another one at the next meeting. So we know that max pain of the interest market is probably going to be about February, March when that meeting happens. They're going to look at the CPI data, which is awful. You know, we're looking at what, 8.2 to 8.4% inflation right now. I'll put that like right here, the number. So we know that the Fed has said we are not going to stop raising rates until we get to 2% inflation. Okay, we're at 8.4, right? So long ways to go. We know the Fed is going to create max pain for the market and halt everything they possibly can to tame inflation. I've talked about this in my last 4 videos, and I'm going to keep screaming it until I can't say it anymore. One of the guys that is going to really get crushed is the little guy. And I want to say the wholesalers, the flippers, the hard money purchasers, those guys holding the bag. Like right now, if you bought a house, because most flippers, they go to the next deal, the next deal, the next deal, the next deal. Kind of like home builders, the next house, the next house, the next house. So they buy a property. They flip it. They try to do it in a quick amount of time to say, hey, my holding costs are X, my renovation costs are this, and if I can sell it for this after I pay taxes, maybe I can make it worth flipping this house. And so I've been watching 3 here in the neighborhood that they bought when the housing market boomed. It took them longer than expected to renovate the property. By the time they got it on the market, the interest rates had changed 3-4%. You know, like they went from probably 3% to now, 7.5% or whatever it is today on a 30-year fixed. Odds are most of these these flippers got a hard money loan. Probably paid 10% for it. Okay, short term. And they know that, hey, I got to get this thing off the books. And the market changed. Now that, say, those same houses that used to were going in 2 days are up 30 days, 35 days. I'm sitting here watching dust to grow on the doorknobs over there because the market has just totally changed. That house is not worth what they thought the ARV was going to be on it after repair value, and they're about to get skinned alive. You do that, 5 or 6 times and you're out of business, okay? Or if you have 5 or 6 deals going at one time, you're toast. And that's how these guys go bust, and that's how I've always said flipping is like looking for a landmine. Sooner or later, you're going to hit one, whether it's extra costs you didn't see, the market changes, or the cost of money changes, which we're seeing right now. I really think those guys are one of the 3 or 4 I'm talking about in this video that are going to get smoked. they're going to go out of business. It's sad. These are the mom and pop, just regular people out there trying to make better houses for people in neighborhoods or in places that the houses have gone to nothing and aren't worth much. They're trying to take something bad, create something good, and make a little money out of it. See, we know that real estate numbers, they unfold very slowly. Usually 2 to 3 months behind lag time on the numbers we see for the data. So people will say, oh, real estate's not falling. I'm like, well, so the numbers won't come out until like next month, the next month, and the next month. And you won't even know what's happening today for probably 2.5 months. So how do you know, right? You don't know. Every real estate agent I know, I'm talking to, are like, we're going back to the old days. Things are going to stay on the market a month and a half to 90 days. Like, we're getting no showings. I know agents, and I said this in my last video, with the Louis Vuitton, the Coach, the Prada purses, and they're like, Jack, I've had no showings in the last, week and a half. All the home builders, no showings, okay? And so I'm gonna go into that right now. So let me tell you about home builders, okay? And I've been around a lot of them. I've talked to a lot of them. I still talk to a lot of them. One, they're scared out of their minds right now because they got caught holding the bag again, okay? They got greedy, they got their hand in the cookie jar, and mom slammed the cookie jar top right on their fingers, okay? They were in the process of accumulating property. I was in these deals, okay? They accumulated the property. They started work. This takes a long time to unfold, okay? And when we saw the boom in the last year and a half, they were in the process of, hey, we need more. Okay, and I talked about this in the last video. Now they've started accumulating all the things to get them built. They're getting them 3/4 built, and the Fed raises rates. Had a deal in the day the interest rates happened, and they literally called and canceled the contract. This was on like 80 houses, okay? So if builders don't build, they don't get paid. So they will get as much debt and they will get as much property as they possibly can in a race to build them and sell them and move on to the next deal. And that's just what they are. So when you talk to a builder, okay, when you're sitting at the table with builders, the builders do not listen to the real estate agents most of the time. They're just like, go out and sell this thing. This is how much we'll give you. Most of the time, the listing agents have a very small commission for the lister because they get all the listings. So you've got some real estate agents that do not want to do new build listings. They're like, nah, I'll just bring the buyer because the buy side will have a higher commission. So when you tell a builder, or when you're sitting there, the builder does not want to listen to the real estate agent. They don't want to listen to pricing. They don't want to listen to anything. They're just like, hey, shut up, real estate agent. Go out there and sell it for the price we told you to. And you're like, I'm not selling it for that price. There's no way you can sell it for that price. And like right now, they're like, nobody's getting showings. And trust me, the agents that are employed by these builders, they're just going to tell them whatever they need to hear to get all the listings. It's like this circular, nobody tells the truth type thing because the builders are like, well, hey, agent, if you want these listings, you're going to do what we say. And the agent's like, well, I don't want to say anything that won't give me these listings. I just need to get them and hopefully I can sell them. Like, I'll just do whatever I can to get the job done. And it's like a circle of whoever is the head person of the builders, like the investor, they're just listening to the builder's company and not the agents that are out there trying to sell them. And the outside agents, they're the only ones really voicing their opinion because they have no reason not to. They're like, well, that's overpriced, not going to buy that, taking my client elsewhere, or we're going to look elsewhere. And that's kind of how it goes. It's this big circle of events, and it's very interesting that you work for a builder, you tell the builder whatever they want to hear, and we just move on. I don't like that. I believe the builders are in big trouble. The numbers are out there. The data is out there. They're in big trouble. Watch my builders video. I went step by step. There's just too many moving parts for them right now, and inflation keeps going. They're in trouble. I see that they're going to have some massive problems that they're going to have to fix. It's just it is a very frustrating side. So now they got their hand in the cookie jar and they know they've got all this inventory out there. They can't move. They're like, hey, real estate agents, what do you think? And I'm like, whoa, 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 whoa. Okay. I've been saying this from the start. I'm not helping you now. So we're starting to get emails like, bink, 5% to 8% commission buy side. $15,000 decreases in prices on select houses. Seeing whole maps of houses they need to liquidate. Look, I'll put, like in my other videos, I showed the emails. I'll put one right here. Check this email out. This is stuff I get on the daily. I'm getting text messages on the daily, promises to buy down points. Because look, most home builders, okay, here's how it works. They have their own lender. They have their own title company. They have their own real estate contracts. Okay, most of the time the agent from the builder will try to grab your client, fill the contract out the way they want it, and then you might be able to look it over before they sign it, and then you're sitting there knowing your client's earnest money is probably toast because that thing is so locked tight, and they know there's all these grace periods for them to draw out the contract till, oh, we might need to cancel that contract. They can cancel. It's hard for you not to. Okay, so it's really hard to protect your client on some of these deals. And you got to really watch them tough. And they know this. Talked about it in the one video about how they were waiting on comps. I mean, they were playing some really dirty games. I talked about it in that video. So watch that video. These builders just don't listen. They're just going forward, and they know that they can either jettison it to like a large holding fund, like a BlackRock or whatever. I mean, there's some cities I'm willing to bet you that some of these, through a lot of different limited liability companies, have absorbed 50% of some parts of cities. Like just housing galore. Okay, they're buying whole city blocks during this whole inflation thing. And think about it, if you have billions of dollars and you're getting eaten away at 8% to 12%, probably the real number, you're losing 12%. You just got to buy something, you know, and that's what they did. Throw a renter in there and it never comes back on the market. Like these funds will own a huge amount of some of these local markets, and most people don't even it doesn't even register, and they know they can get away with it. The next one I want to talk about is whether massive foreclosures will come on the market. I don't know yet. If we're in a recession, we're thinking usually 3 million jobs are lost. That's the normal numbers of a traditional recession. If we have massive layoffs, we could see foreclosures. Although the credit score that people had for getting their loans was much higher than 2008, and we haven't seen the massive job losses, I'm not really thinking we're going to see massive foreclosures, you know, because there's a difference between price fall and massive foreclosures. If things keep going downhill with the economy, if we continue to see high inflation numbers and companies start cutting back, we might see people starting to lose their homes. You know, month over month, the data will come in and we will start to see things happening. There is going to be a big question on whether rents keep going up, which they probably will, because right here in Pensacola, there's a shortage. That's why people are talking about rent control and getting rid of short-term rentals. It's going to be on the next political agenda. If there's a lot of property owners out there, landlords that have multiple properties, and people start to lose their jobs, if we see evictions going up, then we will know that landlords are going to have to tighten their belts, and we might see some of them buckle, because a lot of these guys are buying really bad deals with really small returns. If insurance becomes a really big problem in some of these areas, that could topple people. I talked about insurance being one of those things that could change real estate and crush real estate in the state of Florida and some of these places where wildfires are, and you know, tornadoes, etc. And whether the government's going to step in and really try to change that market and buckle it down to prop these prices up. It's crazy out there, you know. So will there be massive foreclosures? Yet to see. And it's actually looking like that might happen. If we get a lot of inventory come on the market, coupled by the lack of being able to insure it, coupled by a lot of people getting evicted, yes, we will see massive foreclosures. Let's keep an eye on it. So think about this. Think about this. This is another situation. You have an old house that is resale on the market. You have a new house that has fallen in prices because they got to jettison these things. They got to liquidate them as fast as possible. Now competing with a resale house, okay? Mom and dad's 1995 build. They renovate it the best they can, competing at the same price per square foot as a new build. What do you think is going to happen, right? Like, people are going to want the new build. And then mom and dad's house just sits there. Just sits there because there's so much competition from a new build. You know, a lot of these situations are really not making any sense. If you were into Airbnbs prior to this whole deal, you had to hold through the cough, the global shutdown, into the next year. You had to worry about Airbnb telling you what you can and can't do. Then they can insert any type of political narrative they want to into the Airbnb market. It's most of these short-term rental companies are a publicly traded company, so you've got the share price and the new CEOs and all those things that can affect owning an Airbnb. You have the local governments inserting themselves into, and I did a video on this, inserting themselves into, rent control, licensing issues, HOA issues into owning Airbnb properties. You can go from a thing that is cash flowing to not very fast. And if you have, a lot of these guys have multiple Airbnbs to where if you bought at inflated prices and you're not getting that, cash flow to the amount of money you spent on the property, if it's not in the right proportions, so let's say the 1% rule or 1.5% rent rate, you are not going to cash flow that property. And if you're in the state of Florida and insurance goes up, which it will because most of these are on the water or in hurricane-prone areas, insurance is going to go up. And these insurance companies also know that now that it's a cash flow property, it's an investment property, it's not your home or whatever, they can elevate the insurance. And then you factor in taxes that local governments are putting in. That property doesn't make any money anymore. So what's the cost of owning these properties versus the amount of money you're making? What's the risk there? A lot of questions need to be answered. Check those videos out that I did on that. And what really irks me about the whole situation is, the Fed set up this situation to stimulate the economy during a really bad time, okay? They pumped a ton of money into the economy. I think, was it 40% of all dollars ever created were created in 2020, 2021. And, the rich went out, they said, hey, I can get unlimited amounts of almost free money, bought everything in sight, bought up everything. And, then you had the regular good old American out there just trying to get a house during one of the big greatest movements of migration of people probably in this part of our history because of getting away from all the chaos of the cough. So they had to buy these houses at really high prices. And then the Fed reverses to stop inflation, which is a whole nother topic. The Fed just rolls in and elevates the interest rates through the roof in a matter of a few months to kill every type of momentum in the market before it got away, and rug pulled everything. So think about this. Quantitative tightening coming on the horizon, interest rates going through the roof. We're going into a recession, and people had to buy in at super high prices. Fed rug pulls us, drives down prices, and everybody that caught holding the bag, which bought or invested in the stock market, got their money, their equity evaporated. It was evaporated. So okay, so if you watch that video where Goldman Sachs is saying we're going to go down 10 to 15%, Finch is saying we're going to go down 10 to 15%, Moody's is saying we're going to go down 10 to 15%. If we go into recession, 15 to 20%, probably more like 25 because nobody accepts their articles. They're saying we're going down 25%. But you know what? I can say it because I'm just a dude on the internet. Okay? They just rug pulled everybody in this economy. Billions and billions of dollars gone just like that. And what they call equity. It blows my mind. People should be furious. Going forward, it's going to give an opportunity for so many people to get a property at a discounted rate. They're going to be able to negotiate in a lot of things. And this is something a lot of people are not talking about, is being able to negotiate in a new roof. Negotiating in that you fix X, Y, and Z. Negotiating in things like paying closing costs and title. Negotiating in, hey, throw in a survey. Hey, negotiate in a lot of things. This is where real estate agents are going to earn their paycheck. Negotiating, holding people to contracts, the things in the contracts that they absolutely have to hold them into. You know, the elements of the contract. Making sure the deal is structured properly. Protecting their client. So, because since there's fewer buyers out there, there is the ability to be a little more negotiations in the deal. You know what I mean? And if you really think about it, and I'm going to end it on this, is that rent versus buy. When does one carry over to the other, right? Because rent is really tossing money away. But buying right now is, well, is that equity going to stay there or get tossed away? It's, do I want to do maintenance on a property that I live in, fixing hot water heaters and air conditioning units and roofs and all that stuff? Or do I want to lose my money in rent? Am I going to be in one place for a long time versus not? Am I going to be able to refi later versus not? Like, I think we won't see 2% inflation for years. And so we won't see lower interest rates for a long time. So it is almost 6 to 1, half dozen another, rent versus buy. And you just got to decide which one you want to be on. And if the Fed reverses and politicians get scared they're not going to get reelected, and the Fed reverses and turns the money printer back on, well, housing will explode back up to the upside, and inflation will be here, and we'll never see 2% inflation. It'll be like that for years. It's crazy. Comment down below with your thoughts. I'd like to know what you think about this, how you think we should fix it. I want a conversation, because, you know, I feel like a lot of the information on the internet is just people regurgitating stuff and not actually out there in the real estate world and listening to the flippers and the house buyers and the wholesalers. Food for thought. See you guys on the next video.